silver is poor man's gold. So yes, there's when you get the retail on board and the institutions start looking, they'll say, gold looks more extended, so I'm going to start buying into silver because it will track gold or better. So it's somewhat, yeah, that poor man's gold alternative, and it's obviously one's at 3,400 and the other's at 37, much more affordable to the retail investor. So it's partly that. It's obviously the tape as the momentum goes. People get more speculative, and silver is a more speculative metal. It's also that when you enter that stage where silver really is going, part of that is because there's a higher confidence that things are okay. Gold can play when there's trouble out there. Gold can be both an offensive and a defensive asset. And that's another thing people misunderstand. They only think of gold as a defensive asset, and obviously that's been proven wrong in recent years. But it does, when you've got a situation like the Middle East, it certainly supports gold. Interestingly, though, gold's been kind of waffling here for a little bit, the last week or more, at a time when you have heightened risks in the Middle East. So that's interesting, and that just shows you when something gets overbought or gets in favor too much, even the news can't drive it higher. Sometimes it just needs that pause. The pause can be pretty shallow, but while it's pausing, it kind of rebuilds its, the sentiment gets more negative, it rebuilds its ability to move. The won't worry allows it to move higher later on. So, I think gold's acting great. I'm not worried about this very short term pullback. Silver looks really good. Silver broke out from, at least a couple year period, longer than that probably, to 137 recently. So I think that one's alive and well and ready to run.
Okay, so maybe let's touch then on the leaders in the melt up. It sounds like you're very bullish silver and the gold and silver miners, which have tracked gold but probably not outperformed as much as might be typical. And it also sounded like you're very bullish on the small caps still, as well as tech. So yeah, maybe lay out what you're most bullish on in the melt up.
Yeah, I think you named some of them for sure. I think the miners are, as if my numbers are right on the metals, the miners have a lot of upside ahead, and they do look like they're coming out of very long bases in many cases and just beginning to move up. So I think there's big runs ahead in the miners, and this is just pre-bust. There's going to be even far bigger runs post-bust and then a big correction during the bust. But we're just talking pre-bust. I've got a target on a long held target in the gold miners of 65 for GDX and 100 for GDXJ, and they're not that far away. I mean, GDXJ is still 35% away or whatever it is, maybe 40%. But GDX got up to 55. It's only $10 from my target that I've had for probably 5 years. So there's room there for those targets to be raised. I haven't done it yet, but I could. Silver miners, my SIL target is 75. Still a good ways away, but not that far. It was a lot farther away not that long ago. SILJ is currently 15-ish, and I have a 35 target, so that one's got a good distance to go. But even there, I think the miner, that shows you what kind of upside I think we have this year from here. So I think miners will be certainly leaders in this, in terms of performance leaders in this last leg. They could keep going beyond the top in the indexes. People, I make that comment. I've made that comment over the years. People want to pinpoint it. It's not a precise thing. It doesn't have to happen that way. It's just they have farther to go. They're later cycle. So it just stands to reason that you could have the indexes top out, you know, say in September, and the metals, the miners top out, you know, 2 or 3 months later or a month later. So, but there's no rhyme or reason. There's no precise timing of that. They could top out. They could have bigger runs and top out with the indexes. It's kind of a side comment that people take too seriously. It's just the likelihood is they could go beyond the index top. So all I'm saying is if the market tops, that doesn't mean everything tops at once. Some of the later cycle things like miners typically could top later. Other leaders, yes, tech. I think the Mag 7 will continue to play. I know you got some things like Apple where they've struggled recently because of what Trump's doing, in terms of tariffs and the kind of back and forth with Tim Cook on that, wanting them to bring iPhones production here, which seems kind of not likely. They're moving from China to India, which I think is a good move. But when you think about it, even Apple, if ultimately he slaps a 25% tariff on imported iPhones, it's such a premier product that I think it's not going to hit Apple's sales in a big way. There could be an adjustment period, but so I'm not bearish on. I don't talk about individual stocks, but I mean, that's not a stock I would be all that concerned that it's different than the rest of the Mag 7. I think it'll have a catch-up rally, and basically across the board, semiconductors in the tech area, I think, will be leaders. You're going to see. SMH, I have a target of 400. It's at 260-ish. So that shows you there's quite a bit more to go. And I think my 400 could prove conservative. And then beyond that, the financials, I think, in spite of all the concerns out there about, and even for me, saying the economy's slowing and all of that, the financials look good. I think the banks will do well. The brokers will do very well. And so those are another area. I think industrials are at new highs. The indexes are still a couple percent below their their all-time highs. I think the industrials, the XLI has gone to new highs already. So that shows you that strength. Basic industry, materials, I think will catch up. They've been they look fine, and I think they will be leaders in this final move. By the way, a lot of this also is weak dollar. That's going to be another impetus. Is weak dollar will help resource companies, will help gold and silver, et cetera, at least in U.S. dollar terms. And then even consumer, as much as I think the consumer is starting to get tired and has a lot thrown at it that's going to start hitting it. Even the consumer, I think, as you mentioned before, as rates come down, that will probably stimulate some consumer buying in areas. So even the consumer, I think, will be a big participant in consumer stocks in this final leg. The areas that lag will typically be things like utilities. Doesn't mean they won't go up. They'll just not perform as well as the market. Consumer staples, food, healthcare certainly getting hit because of some of the policies the new administration is putting in. And I think rightfully so, they're getting hit. And energy, which has come alive because of the Middle East conflict, I don't think that has legs. I think that will not go very far. Now, that's assuming things play out as, at least as I think they will, that Israel has the upper hand and Iran's going to have to, at some point, capitulate. Whether we go in and bomb them, which I think is a real possibility, bomb their nuclear facilities that are deep in the ground, or whether they just kind of negotiate, something that basically takes their nuclear capabilities off the table. One way or the other, I think that's that's the likely outcome. And in that case, I think energy goes back down, could go back down towards the lows of this year, down towards 55. If the conflict stretches out, all bets are off. It could go higher, but my guess is energy is going to be one of the laggards, energy stocks.